G'day everybody, welcome back to the weekly general update for the 2nd of July and a new financial year. And certainly the US market finished off the year and started the new financial year, although not for them, in absolutely cracking fashion with four big up days in a row, all above 1%. In total, a 5.4% rise for the week, which is pretty amazing. You don't see that very often. So that's certainly set a new tone for the market, and it opens up a lot more opportunities for us. So let's just have a look at some of the key charts. This is the normal important information. This is all general advice, of course. You've all seen this before. So the action for the week, in summary, the S&P closed up 5.4% for the week, and it wasn't surprising because the negativity really had got to an extreme, and I've been talking about this for several weeks now, with the bullish percent index down at almost record lows and extremely negative press. So the market was absolutely ripe for a turnaround, and it's come very, very emphatically. Gold going in the opposite direction, down 4.4% or $70 in the last 10 days, and it looks almost certain that we've got lower gold prices coming as well. Silver still forming a base, still looking for slightly lower in the 30 to 32 area. It's possible that we've bottomed with silver, but I think if gold is going down, and that's what the indications are, then I would expect silver will probably go with it. Copper jumped on Friday night, so it's back into uptrend and looking very strong. So that's a very good sign for the market as a whole, and certainly for the small cap end of the market. The ASX 200 closed 1.8% higher for the week. So admittedly, we've got one more session on Monday to really reflect what happened in the US, but there's no way our market's going 3.5% higher on Monday. So we continue to underperform by a significant amount. So let's get over to the charts, and we'll start initially with the S&P 500. So first of all, we'll have a look at it on a monthly chart. This is the chart view you've been looking at now for some time, and you can see we did get a big dip in June. We got a little bit of a dip in May, closed well off its lows. Similarly in June, so this period was far better than the equivalent May and June of 2010, and now we've now recovered again. So we're almost back to the high point of June now, just basically in the last couple of days. So you can see still up. Still strong uptrend. No reason to suspect that that the US is doing anything other than continuing to head higher. And I think the way that it's looking, 1550 at some stage over perhaps the next 6 months has got to be a distinct possibility. Let's have a look at it on a daily. This was the correction that we had, which was around about the 10% mark, a little bit under in the US. We formed a double bottom down through here, so formed a little double bottom, and then once the index went above this high of the 21st of June, which occurred on Wednesday night, then it was pretty obvious that we were heading higher, but then we got a big surge on Thursday and again on Friday. Now what I was expecting, you can notice here I've just traced out a little bit of a pattern. And what you can see is that I was expecting a pullback after that big jump on Thursday night, a little bit of a pullback to buy the dip there and then push higher. But the US market is so strong that it's just basically roared straight up. So quite a lot of strength in the US market. However, it is now overbought. We're almost up to 70 on the RSI, so we are getting very close to being overbought. So let me just adjust this. I still think we will still get this kind of pattern. So we don't want to go thundering into the US market at this stage, or buying the US index. Wait for a bit of a dip, and we'll be looking to buy it at that point. By comparison, our market underperformed by a long way. This is the monthly chart. As you can see, it's nowhere near the US market. The equivalent position on the US market is somewhere up around about here. So that's just how much we've underperformed the US market since March of 2009. Admittedly, they fell further than we did, so I guess that's part of the explanation. Let's look at the ASX now on a daily basis. So you can see we were clearly in a downtrending channel. We formed a slightly lower low, which kind of tricked me into thinking that that we were heading lower. But as I've communicated in a couple of different forums lately, we're seeing a very high incidence of markets pushing to false highs and false lows or breaks of ranges. So the fact that this traded a little bit lower than the previous lows from March is pretty normal these days. And then on Thursday we broke above the downtrending channel. I thought it's possible we could have pulled back significantly on Friday. That didn't occur, so again that's a positive sign. And at this stage the futures are indicating that we'll be somewhere up around about this support and resistance line, which is about 46.50 on Monday. So certainly looking to do some buying. Let's have a look at the individual ones just quickly. They're in the daily alerts, so I won't labour these. The banking index broke out of this downtrending channel. Really Wednesday was the first positive day. Thursday was a very strong day, and then Friday we gave back some. Materials similarly popped its head above the downtrending channel, which has really defined its movement since the start of the correction in April. So I would expect now that we will start to see the materials index work its way higher. Energy similar. Let's have a look at the Small Ordinaries Index while we're here. So the Small Ordinaries Index, you can see, has not quite made it out of its trend channel just yet, but I would expect that will happen on Monday. So I think Small Ordinaries will confirm a change of trend on Monday, and the ultimate confirmation of that would be a close above 26.20 would be the ultimate confirmation. We closed at 25.60, so 60 points up on Monday, entirely possible, because certainly the signs in the last couple of days for the small caps have been looking much more positive. And let's just have a look at the healthcare index, because we've been looking for an entry on Cochlear now for a couple of weeks. You can see we got a break on Wednesday, confirmed it on Thursday. There was a bit of a turnaround on Friday, but I think now clearly healthcare is broken to the upside, so we need to go with that as well. Let's have a look at gold and silver. So first of all, gold. Let's pan back and have a look at the big picture. We've got a very strong uptrend in place, and gold could pull back to, at the moment, sub 1400 and still be in strong uptrend. It could pull back all the way back down to this level, 1231, which would break this very strong uptrend but wouldn't necessarily negate the overall bullish market that started 11 years ago, because all we'd be doing is pulling back to the 38.2% level of the rally that started in October of 08. So we've got to just keep perspective in mind with gold. It may move around quite a bit in the short term, but it doesn't mean that the bullish rally is finished. So let's zero in a little bit closer. This chart looks a little bit messy, but hopefully you can see what I'm getting at here. I'll just remove this for the minute. That'll tidy that up. So you can see gold went up to 1557, formed a lower high than what we formed in May. We then got 2 significant days down. We then got, I was expecting a rally back to at least the 1516 area, and I'll show you where I get that number from in just a minute. And then so we get an A, B, C pattern to the downside, looking for either 1471 or 1440 or 1410 were the levels that I was looking at initially. Now let's have a look at this run down through here. Let's just put a retracement on this part just here, and you see that, take that across, you can see that even the weakest rally just up to the first retracement level should have got the index, or should have got the gold price up to 1517. In fact, it was only able to reach a high of 1514. So this trend to the downside is fairly strong because the rally has not even allowed it to get to this first retracement level. So that's why I'm thinking more along the lines of 1410 as being our target. Next is silver. Down on Friday night, still basing out and still looking for this 30 to 32 area there. Let's have a look at copper. Now this is on a weekly chart. You can see we had a retracement. 391 was the first retracement area of this run here from June of last year to the April highs. 391 was the bottom. We did spike down to 385, but not on a closing basis. So I don't think it closed below 391 on any one day. And now we've had a very strong surge in the last 2 days, and you can see some rising volume behind it as well. So it appears to me that copper is heading higher, and that's basically good, certainly good for small cap stocks. Just back on the gold theme as well, we've got a significant divergence building up between gold stocks and the price of gold, and whilst gold was going up, we had stocks going down, and now we seem to be getting stocks finding support and starting to rally. This is Newmont, which is the second biggest gold producer in the world, American gold company, and you can see despite the very significant sell-off in gold in the last 10 days, the price of Newmont has actually gone up slightly, and it also lost ground on Friday night with gold falling, but then recovered all of those losses and basically closed on its high of the session. So I think whilst I'm calling for gold to be lower, what I'm seeing is perhaps the start of some strength in gold stocks. So I think there's some good opportunities there as well. So that's it for the big picture general update. I'll come back with the update on the specifics of the large caps and small caps. That's it. Talk to you next week. Cheers.